Hello traders, Gary Wagner here just before 12 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, 7th day of November 2017, and this is the Daily Report for Gold and Silver. After having a nice upside spike, taking gold to the top of the trading range yesterday, it has softened and moved back into the middle, closing down $4.90, with gold futures settling at $12.7670. Silver also breaking back below $17 per ounce, a net decline of 26 cents on the day, closing at $16.97, with the U.S. dollar up nominally, up a little over 0.1%, 94.81. Crude oil, which spiked up aggressively yesterday due to some conflicts over in Saudi Arabia in terms of a corruption scandal, that softened a bit, closing off 34 cents, but still above 57.01, and for the 58th time since Donald Trump has been elected, we had the Dow Jones Industrial Average closing at an all-time new record high, up 9 points, but nonetheless a new record at 23,557. After trading to the highest closing price gold has been in over the last couple of weeks yesterday, and that's the top of this green candle here. Today, we did see prices soften as the market closed down about $5, $4.80, currently fixed at $12.7680. Once again, putting it smack in the middle of this defined trading range with real resistance at approximately $12.82 and really defined support just above $12.62. We can even say $12.65 in terms of our current support level. In fact, ever since gold prices came under pressure after reaching the high of the year at $13.62, we have seen defined downside pressure once the market broke below the 50-day moving average, which is this red line right here. There was only one occasion over the last month in which we popped up very briefly just above the 50-day moving average before declining back into negative territory in terms of being below our 50-day moving average. On the other side of the fence is the fact that even with prices under pressure, they have maintained a price point above the 200-day moving average. So in terms of a big picture, there is still a bullish tendency, although it's been under tremendous pressure. When the markets are tracking in such a narrow and defined range, if we look at recent activity, that doesn't occur that often. We have this period right here in which the market was on an upward trajectory, went sideways for a while, and then continued moving back up. On this particular occasion, we have not been able to break one way or the other. There's a couple of ways you can actually play this market. One of the ways that you can play this in terms of a very short-term basis is you look to sell the market whenever it tops or goes above about 1282, and then you look to cover or initiate longs whenever the market tracks to about 1265. Straight futures strategy. The other strategy is to work with options where you write options. You might want to write call options above 1290 or write put options below 1260 and take premium in. You could even cover those calls with the purchase of an option just above that strike price or below the put price, which would define your risk as well as your reward. The problem is when the range is under $20 or just about $20, it is difficult to make any kind of a play. Our strategy here at the Gold Forecast has always been one of defining trend and trading the trend itself. We look for big moves in the market, and quite honestly, we have not seen them recently. And traders, of course, silver has also been trading under pressure, but it's also been mired in this really whipsaw type of market. Take a look at the MACD, which seems to be crossing back and forth, and also take a look at the 50 and 200-day moving averages in silver, in which they have come together and also given us mixed messages. Nonetheless, in terms of silver itself, we have that defined range with the top at around 1750 And we have two bottoms, one at 675, which has been the occurrence for the better part of the last 2 weeks, and this extreme low, which comes in at a 61.8% retracement. We are still in a holding pattern, but as I said, there are a couple of strategies that we can implement, but it would mean going into a much more short-term trading mode or an option strategy. And those are the two topics that we will discuss should this market continue to track in this narrow and defined trading range. Traders, as long as gold maintains itself in this narrow and defined range, we talked about a couple of strategies we can implement to take advantage of the fact that gold really isn't moving a lot. One is a strategy in which we are writing calls and puts. The other is trading the range itself. Of these two choices, I recommend the first choice, in other words, an option strategy. And we'll talk about that in more detail throughout the week. And if gold remains in this kind of a tight trading range, we'll implement that strategy. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.